It has been a wild ride, folks. We are back with another Friday financial wrap up. How are you, Mr. Michael Zuber?
I'm doing well, man. How are you?
I am doing well. Let me ask you, I asked you this pre roll. I want to ask you on camera. How does it feel to be so right all the time?
As I said, it doesn't suck. But more importantly, I think being right all the time is wonderful. I will admit, but people need to realize I am making personal financial decisions based off the opinions I sell. So, um, or I my opinions that I share. But yeah, it's fun, and obviously, when you cash a check, when you make some money because of what you thought was coming, it's a great feeling.
So good. So good. So this is for Friday, March the 24th, 2023. We are going to talk about the Fed. The Fed announced this week, but we're going to save that for the very end. And not only that, but we're going to break it down from your words, not mine. What does this mean to the one rental at a time investor? What does this mean to realtors, loan officers, maybe somebody looking for their very first deal? We're going to save that. So folks, stay with us to the very, very end. Let's get right into it. So this week, existing home sales. What did you see this week?
So existing home sales was frankly a barn burner number, even above my aggressive expectations. But let's kind of paint the picture. So we come into the year. January was a slow month. We did 4 million transactions. I came out and was very clear that I said 4 million is the bottom in transactions. And man, people did not like hearing that. I got so much heat, so much attack. We're going lower, going into threes. The world is ending. And I'm like, nope, 4 million is the bottom. So the first month after January is obviously February. The expectations from the experts were 4.2, so 4.2 million. I thought they would be better than that because, again, I talk with investors and agents and all of that from across the country. I estimated or guessed 4.35. Again, they exceeded my expectations. They came in at over 4.5 million transactions, up 14.5%. I want to say a couple of things about this number. I think this number is distorted and can't be repeated in March. Why do I say that? Again, I talk to agents and investors from around the country. How many of you investors had inventory sitting on the books in December and it was crickets? Nobody showing up, no open houses, nothing. You were nervous about what is going on. And then January hit and you got offers. I knew investors coming into the market that had 6 to 10 properties sitting and they were frightened.
Yep.
All of them have since sold. Many of them have since closed, right? So again, I think February was an artificially goosed up number because of the excess holdings from December.
Correct. Yeah.
That is all gone. So I expect March to be down and probably down to like 4.2.
Yep.
But still above the bottom call of 4 million. So again, it feels right to make that call. I'm calling it right here, right now. March will be 4.2 because once you sell your backlog, you got nothing else to sell. So I think that's why February was artificially high, but damn, 4.5 million in February. That was a good number.
Yeah, I would agree with you. And it's interesting just because I follow you so intently on the daily news. Obviously, we get to talk several times a week, but just knowing that I had stale inventory that was just sitting and you were calling for interest rates, you could see interest rates were going to probably soften up. And I was able to get a bunch of price reductions that turned into closings and sales based on following you and what you were, talking about what's to come. So really, really good. When you talk about 4 million plus transactions, you're talking about a trailing 12. Explain that to the viewer. What is that 4 million? It wasn't 4 million actual transactions in the month.
Yeah, it's called an annualized number, so not quite trailing. So basically they take the month of February, they times it by 12. That's the annualized number. National Association reports a yearly number. We did 6.7 in 2022. We did 5.1, I'm rounding, in 2021. And then we did 5.1 in 2022. I think we do something closer to 4.2 total for 2023. But at this point, all we have is annualized numbers. We were 4 million annualized in January. We were 4.5-ish in February. So that's what it is.
Very good. Let's continue. So what did you see this week? What did you see this week with new home sales?
So it's very interesting. Folks may not know this, but we have existing home sales, which we just talked about. We just had new home sales. Just so people have historical context, historically speaking, existing home sales was 89% of total transactions, and new home sales were 11%. A lot of people in the YouTube universe world where I play have been calling for the demise of home builders. They're going out of business. They can't sell. They got to do this. They got to do that, of which I'm saying that's just not true. Lo and behold, new home sales came out. They were up. The expectations is they would be down negative 3.1. They were up 1.1. I called this as well. Not only were they up, but the median price was up, which I also called. It was up 2.5%. Folks, what is going on today is unique, and I understand why some of the younger YouTubers don't understand. What we have right now is existing homes not showing up, and we still have lots of willing and able buyers. So what they're doing is they're buying new homes because new home builders can offer rate buydowns, 2-1 buydowns. They can offer free upgrades. They can make the payment work. So I fully expect home builders not to do 11%. They might do 15 to 18% of total transactions because they are the only variable to create more supply. Supply is not coming back at 6% interest. I'm sorry. But new builders can build homes. And I just had this conversation with Lance Lambert, Fortune editor, all things real estate. And he's like, yeah, the first builder that builds cheap homes wins. So again, I expect new home builders to dominate. KB Homes, low, entry-level home builder. Not only did they beat revenue and earnings, but they announced a $500 million stock buyback. That's not something you do when you're worried about hitting the bottom line. So again, builders are fine. They're actually going to do really well this year. I'm sorry, people looking for a crash in home builders. It's not coming. Just read the income statement. It's not coming.
Very interesting. You've been talking about it for a while and it's coming to fruition. So again, spot on. I love it. Let's continue. So something we talked about pre-roll is, if somebody wanted to get a 20% discount, if somebody was on the hunt for a deal, where should somebody be hunting for that discounted property, that discounted opportunity? What are your thoughts there in today's market?
Yeah, so I listen to Patrick Bet-David at Valuetainment. I listen to a lot of his stuff, and he on occasion gets on a rant about real estate. Recently, he had somebody on that was talking about real estate, and he's saying, I'm seeing 100K price drops, 500K price drops, in all of these, rather aggressive price drops. Also, somebody that we both know, I speak with Adrian Hernandez every Wednesday, and we talked about Orange County. Orange County is a unique, very expensive area. So he did some real work. He pulled up, I call it homework. He did homework for my channel. And he pulled up every listing for the last 365 days over $3 million, which is luxury in Orange County. And he pulled it up and he shared it on screen. And what we saw on screen was the more expensive the home, the bigger discount. So what I would tell folks who have the money like Patrick Bet-David is if you want a 20% discount, you need to be shopping for homes listed at $25 million. We saw multiple opportunities of homes listed at 25 million or above that were discounted 20%. So again, Patrick is right. If you happen to be fortunate enough to be worth 100 or 200 or 300 million bucks, and you can shop for a $25 million home, you too can get a 20% discount off list. Most people, myself included, don't shop there. We can't get 20% off list price in today's market. So Patrick's rants about the luxury market are true, but way out of context and not in the realm of current. But it is factually true. If you want a 20% discount and you can shop for a $25 million home, go nuts. So there you go. That's how you do it. You buy a $25 million home.
Wild. I love it. I love it. So it's funny. I had an acquaintance, a friend acquaintance that did have a $25 million property on the market for like 3 or 4 years. And I mean, just talk about an outlier. It's in an area that, that market probably median value is like 700,000. And the thing,
A little
yeah,
bit
the
of it.
thing's
It's called a white elephant.
yeah. And I mean, really very specific, built for him. He hated California politics, moved out, but I think he ended up selling it for like about 18 million.
Oh, there you go.
Yeah,
Congratulations.
so you're
You
right.
too.
The big discounts are in the the thick capital. So
Yeah.
let's continue. Let's talk about, let's get into the nitty-gritty, what we all been waiting for. The Fed this week, obviously 25 basis points, no surprise for us. You've been
Correct.
calling 25 basis points, feels like, for months and months.
Months and
Yeah,
months.
months and months. Go check. There's receipts. You can go back and watch the playlist of, 12 episodes ago. You've been calling this. You called 25, maybe a pause. You called terminal rate around 5%.
Yep. We're going there next meeting in May. Yep.
We're going there next meeting in May. So you've been calling it. So let's talk about, what are your thoughts? Obviously, and let me kind of tie it all together too, because there's a lot more going on. Banking crisis, liquidity issues, FDIC. We're not going to get into the weeds of, what the FDIC should or shouldn't do.
No.
But let's talk about, what does this mean to, I'm a first-time buyer and I'm scared as hell. Should I buy a house in the East Bay? Should I buy a house in Sacramento? Should I buy a house in Fresno, California? Or I'm a realtor. Oh my God, my clients are freaking out. What does this mean? How do I interpret this to a client? Or the one rental at a time investor. I've got 4 properties.
Yeah.
I'm looking to buy a duplex or a 4-plex, but I'm a little scared because I have no idea, what does all of this mean with the Fed, and tie it all together, Michael.
Yeah. So we're going to go one by one, and I'll go in the order that you shared. So we'll do first time home buyers first. So one of the things that was very interesting going on for first time home buyers is the Fed raised rates, but the 10-year treasury went down. Mortgage rates yesterday went down, and they went down by 30 basis points. What does that mean? They were 6.75 Wednesday morning. They were 6.45 Wednesday afternoon. So the first thing is, home buyers, first-time home buyers, you qualify for more, or your payment went down, depending on how you want to look at it. So net positive. I just looked at the 10-year treasury. It's down, at least at the moment. So rates could be going down further. I expect rates, and actually made a crazy, wild ass call, that we will see sub 6% by April 15th. Not financial advice, just one crazy guy going, I think things get better. And I made that call before the Fed meeting. So we'll see. Net is, I think what we're going to see for new home buyers is interest rates stop jumping all over the place, because we're very close to the terminal rate. We could be at the terminal rate today, or I think we'll be at the terminal rate in May. And then the Fed pauses. So for owner occupant buyers, my general feeling is rates slowly trend lower, because you're going to see the margin collapse. So net for home buyers, we hopefully don't have these gyrations in the very near future. I hope it's a more traditionally slow moving target. So that's new home buyers. What do you think?
No, I think spot on. I mean, I think you've been calling it, but again, because all of the chaos in banking, and correct me if I'm wrong here, but because of the chaos in banking, a lot of people are moving their money to treasuries, which then is actually, is that why the 10-year is softening up? Is that why mortgages are softening?
Yeah, it's just, it's well, there's a lot going on. What I would tell you is happening by equity leaving, or cash leaving the banks, is the banks are getting in more and more trouble, right? It's creating it's a recursive loop that the only way you fix it is with confidence. And there's a lot in that. But yeah, rates are going down because people are afraid, right? I think what the bond market is clearly screaming, hence rates are down. Rates are down, prices up. It's really a lot of people don't understand. But the reason rates are down is because people that think a nasty recession's coming.
Got it.
That's what
And
they
I
think.
mean, we talked about soft landing before on the recession, but based on everything with the banks, everything that's happened in the last 2 or 3 weeks, I mean, is it pretty inevitable? Or we definitely, it seems pretty obvious to me, but I don't know your thoughts about a recession.
Yeah. So first and foremost, we were always going to have a recession. The question was time.
Got it.
A month ago, with everything I saw going, I was thinking early 2024. I do not change my opinion very often. I do not like being a flip-flopper. I will hold on something until the very last moment. I changed my opinion about a recession Saturday after Silicon Valley Bank. I said, all of this craziness, all of this noise I'm seeing, it scared the consumer. They're going to retreat. They're going to move their money. They're not doing squat. So I did change on my call for a recession. I actually think it might start as early as Q2. It's too
Okay.
late to impact Q1, but it will impact Q2. I think it could be that meaningful. Either way, it's coming earlier than I originally thought.
Okay.
So yes, it means something. So now let's talk about realtors. That was step 2, I think, in your
Yep.
3 steps.
Yep.
Realtors, February was probably above your expectations. You, like investors, probably had inventory lagging. You suddenly saw open houses. You suddenly got a bunch of offers. It's not 2022 again. What you had is stale inventory that's sold. So what I would tell real estate agents today is you need to go get some listings.
Okay.
And I would focus below the median. It's there's just nothing to sell, man. Dude, inventory below the median is under a month. Inventory above the median is 3 months.
No brainer.
Just no brainer, right? Yeah, and if you do get a pocket listing, there's probably willing buyers. If it's the right type, go network with investors. Just speed the cycle, remove the friction. But yeah, it's you got to right size yourself. Again, I'm telling agents and brokers, I think we do 4.2 million transactions for the year. That's down 1 million from last year.
Yep.
I do think this is the bottom, so we get out of it. So don't inflate your burn multiple. Don't look at February's closings and suddenly triple your marketing. It's a
So
blip
good.
because we had extra inventory.
Yeah, it's not like all of a sudden February the switch got turned on and now we're just based on
gangbusters. No.
Yeah. Yeah, you've got to be prepared. And I so spot on about the marketing and wasting money or just thinking, okay, now it's okay. Now I'm going to plan that big vacation and trip. You said something too about being frugal. If you had a big trip planned,
oh yeah,
you said something. Talk about just being thrifty, being wise with your money, and then we'll bring it to a summary. We'll bring it to an end.
Yeah, we got to hit investors last. But what I said on, I think it was Tuesday, I really have moments of reflection, right? Because this is what I think about most of the time. And I'm like, I've been through a couple of crises that went much worse than I expected, the dot-com crash and the Great Recession. I am willing to admit I have no idea what's coming. I have a feeling, I have a guess, but I also know I can be horribly and spectacularly wrong. So what I said the other day is if I was on the books for spending, a big chunk of money on a variable expense over the next 30 days, I would delay it. As an investor, I have a capital budget. I am not deploying any of that capital budget over the next 30 days. I want to conserve. Capital budget meaning, doing a painting or a big turn or, whatever. It's non-required expenses. I'm not spending anything that's optional for 30 days. I just want to see where this goes. It can get spectacularly horrible with multiple bank runs. I have no idea. I want to be as liquid as possible. And for the next 30 days, which is probably 25 days at this point, I'm just going to chill out. I just went and dropped a huge number on a 30-day long trip. I don't think I deploy that 30-day. I don't think I do that today. But the money was spent 9 months ago, right? It was fully paid for 9 months ago. But I don't think I write that check today. So that's,
Makes
again,
perfect
this is
sense.
what I'm doing in my personal life.
Makes perfect sense. So let's bring it back to the investor. Your
One
thoughts on,
rental at a
okay,
time. Yeah.
where we're at right now, the one rental at a time investor. What are your thoughts on opportunity? Maybe in
Nothing
terms of,
changes. Nothing changes. Do the work, buy box. The one thing that all new investors should do today, or one rental at a time investors, is call or talk to a second lender. I think there's
yeah,
going to be a lot of lenders that will, things will change. They have the right intentions, but it doesn't come through. Some lenders will stop at a moment's notice. Rates and programs can come and go.
yep,
I think every real estate investor should have two investors they have files with. And if you have two, you should get a third. You should always do one more than you've historically done. Because again, there will be investors starving, which means they'll compete for business. And it also means some lenders will make promises they can't deliver on. So do yourself as an investor. Great deals are always meant to be closed.
yep.
The one thing that you can control as an investor is having multiple lending partners. So please get another partner. I talk to Matt, the mortgage guy, Convoy Home Loans, Velocity Mortgage every week. They all are in my Rolodex and more. So don't have only one lender. That would be my advice.
Spot on. We have a mutual friend that over the weekend, their down payment on a fix and flip deal doubled. It went from like 75, 80 grand down payment to like 150 down payment and the lender is a very good lender, a very respected lender within our world.
Yeah.
It just because money is tightening. And so it's so spot on. I just was talking about that this week, Michael, about making sure that you've got 2 or 3 people, and also where are your funds coming from? Do you have a private placement? Is this your own funds? Are you managing a fund where it's wealthy individuals, or is this, a warehouse line or a credit line of some sort with a community bank or regional bank? So
yeah. Yeah. Do yourself a favor. This is the time where you are going to find those great deals. You will be able to put them together. If you're relying on loans, do not get got. Have multiple lenders, multiple files. Just do that extra work.
spot on. I love it. Michael, thank you for all that you do. Congratulations, folks. Michael announced a class he's doing this weekend. It's not available. He sold it out within a couple of days. He's doing on Sunday a buy box. Tell him a little bit about that. Just real brief.
Yeah. One of the things I did on my 30-day trip is I got quiet. How can I do more? How can we do better here at one rental at a time? And one of the things is the buy box. The buy box is something I talk about all the time, but I don't go deep enough, I think. So I created an opportunity to have 100 people via Zoom call. I'm doing it as a meeting, not a webinar. I think that is important because I'm going to be able to interact, bring up their spreadsheets, bring up their buy box. We're going to go deep, answer any and all questions. It's 2 hours long. My hope is we get that done in about 75 minutes, and then we're going to get to transition into building your tracking spreadsheet. So I think this is going to be an event I repeat because I think it's important to do live with interaction. I haven't scheduled the second one yet because I want to make the second one better than the first. So I should probably complete the first before I announce the second. I do envision it being repeated. I also envision it being sold. I am going to record it. Assuming it meets my high expectations, you can buy the recording once it's done. So this is something, and it's relatively cheap. It's $47. A buy box gives you great deals, but it's also insurance. For $47, it's insurance against doing bad deals. It's ridiculously cheap. So I envision it being amazing. We'll wait to Sunday to make sure, but I look forward to over-delivering once again.
I love it. As always, you always over-deliver, Michael. Thank you for all that you share and do. Folks, if you would like to see Michael put together that buy box, the second event, if you have interest, put some notes in the comment.
Let me
We'd
know.
love to hear from you. Michael, thank you for all that you do. Have a great weekend.
All right, brother. Take care.